This Fortune 500 company in the S&P 500 has a lot of cash and zero debt. A company with zero debt and a lot of cash, but it also has one knock against it. So in this video, we're going to go against, not we're going to go against, but we're going to review their latest filing with the SEC. We're going to look at the actual data from how much cash they have on hand, how much debt they have on hand, and it's a household name. And but then again, we're going to talk about the big disadvantage that I see with this company as well. But first, hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned in to the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls from the beautiful city and state of Denver, Colorado. Don't forget that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So we're always looking for companies with little to no debt and to have a high cash pile. That shows me they have a competitive advantage. And also that means that future money won't be going back to paying debt. It will be going back to grow the company. So we're going to look at this company here. This is their latest filing. I don't want to show their name just yet. We're going to reveal their name at the end of the video. And what we're going to do, we're going to look at their 10Q filings, right? So right here, we're going to stroll on down. This is their 10Q filings, their assets. How much assets do they have? On March 31st, they reported a total of $23 billion in cash and the total assets of $138 billion, right? So they reported $23 billion sitting in cash, $36 billion sitting in marketable securities, a total current assets. That means assets that they can touch within a year's time frame, $69 billion. And they're looking at overall total assets of $138 billion. You stroll on down here to the total liabilities, that's $33 billion. The company's net worth is over $100 billion. It has about almost $70 billion sitting in current cash. And we're going to talk about their little debt. So let's stroll on down here. Their revenue, this quarter here, their revenue was $17 billion in the last quarter. So they're making high revenue. They have a large cash pile. And we're going to stroll on down here to see what is their debt they have on hand. As we can see here on March 31st, when they reported their quarterly earnings, for their total cash and cash equivalents, they had $60 billion as March 31st sitting in cash. Now, right here on note number 8, it says in March 2016, they entered into a $2 billion unsecured credit facility. And as of March 31st, 2020, no amount has been withdrawn. So they have $2 billion they can touch. They have like a $2 billion credit card they can touch, and they have zero debt on hand. So this company has zero debt on hand, but it has $2 billion that they can touch at any time if they needed it. This what makes it look a little bit better from the SEC. Maximum borrow capacity, you're talking about right here, $2 billion, right? And then also they have amount outstanding, zero. So ladies and gentlemen, this company is called Facebook. That's right. This tech company is called Facebook that has zero debt on hand. But the only bad thing about Facebook is I want to get into that one knock they had that I saw as well. The one knock I had to give them with their revenue. Their revenue streams come from advertising. $17 billion comes in from advertising, and $17 billion came from advertising last quarter, and they had $297 million come from somewhere else. It just says other revenue. With the revenue is pretty spread out across the world, right? Most of it's coming from America, Europe, and Asia, and from other places. But it just tells me if their advertising gets hit by anything, this will hurt the company tremendously. So that one revenue, it pretty much got one strong revenue source, but it has zero debt. It has a large cash pile, but it only has one revenue stream. I don't like that compared to somebody like a Google who has 3 or 4. But I did want to show you guys and girls how to look at a company and to look at a company's revenue, their cash pile, and to see how much debt they have on hand. Because when a company has debt on hand, the companies start to focus on not growth, but they start to focus on managing their debt, like airlines. Airlines right now, they're trying to manage their debt through these hard times. Versus a company like Facebook, they can go out and acquire, and they're going to be looking to expand. So that's a little tit for tat I want to give you, and to give a little nugget, something for you to think about, and maybe put on your watch list if you already don't have it. All right, until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace, be safe. I'm out, and thank you.